We're going to check out SPX on multiple time frames, go down to that 65-minute, and then we're going to roll through a bunch of names because they're all saying the same thing. So stick around. The most important is VIX. We're going to do that right towards the end of the video. So if you are limited on time, at least check out the VIX setup here again. Okay, jumping into it. If you're new here, go down to that Options Tenor logo, hit that subscribe button, and don't forget to like the videos. We really appreciate that. Let's jump in. We have SPX on the monthly time frame. We're at the top of the range that we've been talking about for months and months, 11 months, 12 months, whatever it is. So we're at that top of that range. We're clearly seeing resistance. We're up against that 20-month simple moving average. Super important average. It's actually starting to curl down a bit. So let's go to the weekly. That's the most important part on there, that we're against resistance. This is not the time to go long. By the way, we do these videos often, so hit the notification bell. All right, we're making lower highs, lower lows. That's the point of this chart. We did break out of this channel, but we're really moving in a sideways motion. So this channel breakout, this means this move is done. Whether you have this as the end of the move or this as the end of the move, either way, we've corrected since. And we're not really getting to the upside. We're not impulsive. We're not setting up that way. So what I suspect is that our next move is to the downside. Look at this RSI. It's kind of giving us that very, that ascending triangle or pennant or whatever you want to call it, but it's very bear flaggish. So on the week, it looks like we're going to possibly have an evening star if we end like this. And then we'll look for either the follow through or the movement to the downside from this point. I think it's going to be to the downside. That's my best bet through probability. But if we start to break to the upside and break the high of this weekly candle, then I believe we go higher. Okay, on the daily. Daily trend is our friend. Okay, now this is what we've really been focusing on, and this is a triangle. We've started off with the end point here. That's how I've been counting it. You could still count this a little bit different, but both of the bearish counts are just going to end up the same way. One's just going to have a correction and go further down, and the other is going to stop at one point. But we'll talk about that in a bigger picture later on. We have the A, B, C, D, E triangle. We are at the top of that triangle. We have a little bit of room. If you look at the SPX, you have a tad bit of room to go. If you want to touch the top of that triangle, that's fine. That'll give us another short setup for us. But on ES, it already touched that top. And I do believe we had an impulsive move to the downside. So I really don't think we're going to get up there, but always got to keep an open mind. Okay, and same thing with the RSI and the MACD. We're just kind of, we're showing that same triangle. Okay, we haven't had a crossover yet to the downside, but price action will lead that cross. We just don't have confirmation on it. Okay, getting on the lower time frame, the 65-minute, let's see if we can see anything else. Okay, this last channel, that's, again, right off the top of here, off the top of the channel. It doesn't look impulsive from this point of view. You can actually count it as a 5-wave move, but I think the 5-wave move ends here. I have the 15-minute chart, which is a leading diagonal. So the first wave is, this is a 65-minute chart. I'm not going down to the 15 because I don't want to toggle back and forth all over the place, but just trust me, I have the count here. This is a wave 1. It's the largest wave. 2, 3, and wave 4 and 5 really small, but you have a leading diagonal where the wave 1 and the wave 4 actually cross each other. So that's why I'm counting it that way. Then you have an A, an expanded B, and going into C. Now that C is already past the 50% retracement, and right up there at the 4109, just so happens that's where the 61 0.8 retracement is, which is our golden zone to go short. So we will add on to our SPY position any moment now. On ES, looking at the 65-minute, we're going to stick to the 65-minute. It gives you the same point of view, right? But that downtrend line has already been tested. That's the downtrend line here. And the 180 was our really like a flipping point for us. But again, if you zoom in here a little bit, it looks a little bit different on the, you have a 1, 2. You see that wick up there? That's on the 15-minute chart. That's a 1, 2, 3, 4. You have this ABC here for 4. So it wasted a lot of time there overnight. And then you have the last 5-wave move down for 5. So it looks a little bit different than what SPX does, but that's pretty typical. But that's why we look at both charts. We look at the SPX, the ES, and the SPY, so we can always kind of check each other, make sure we're all on the same page. Okay, now NQ, which is what we just went short on the options guide. Check out in the description. We made a live trade there. I post a lot of my trades on that Discord, and so all we're doing is getting a back test. We're right there. You have the uptrend line, attack there. All right, broke down with a clear 1, 2, 3, 4, 5-wave move down and a back test right to that line. So that's what's happening real time right now, and we're short. Yeah, you're gonna see pokes above it. It's a zone. It's never. But now you start getting on top of it and breaking levels. That's a whole different story. Now you notice this is the key level right here at the 13, about 200 area. So you see how that's what it's also testing as well. And that's super important because levels are actually, in my opinion, more important than the pivots or these trend lines. I love levels more, but you can't ignore these perfect trend lines like that, where it breaks down, back tests one time, and then comes back to back test again. All right, so that's our one back test there. And it just so happens, I skip past it, but we're already at that 50% retracement, and that's really typical for the Nasdaq. So it already retraced what it needed to. You have RTY retesting this channel. You see the channel came down, retested many a times, back to that channel. We got above it, but broke back down. Now it's just back testing again. There's your other back test. I haven't looked at, I didn't look at the Dow today, but it's been kind of holding things up throughout the week until today, it appears, or yesterday. We had the point of control, so we knew that that was a short interest because that's a volume node right there. So we broke down impulsively, and I think this is a corrective move for wave 2, and we continue on to the downside. BTC, we are short BITO. We're short BITO. Why? Because we had a ascending triangle right here that we broke down today, and back testing again. Same thing. All right. What we're gonna do VIX last, so stick around. Apple, we're short Apple. I did this one on the YouTube Shorts. So if you are a subscriber here, you should have already seen that YouTube short, or you may actually find it in your in that app. So impulsive move to the downside. ABC to test this gap. That gap just so happens to be the 618 retracement, the former 786 that we're breaking down in this area, and also the 618 from the high here, from high to low. That's a 62% retracement. Again, that's a golden setup for a wave further down. Now, where is that going to go? Now, you can actually measure these types of moves, and it's very typical for wave 3 because we're considering this a wave 1. Let me put this 1 here. Wave 2. And now if you grab your extension tool from the top to the bottom, that measures out that move. And then from your point that we're ending at, supposedly, I'm anticipating, we haven't, that's not confirmed yet, the 62%, And we should move down to about that 157 area, that 1618. Doesn't have to, you can go further. It can extend to the 262 area. Doesn't matter, but a good spot to look at is that 157 area, which coincides with the 618 retracement formally that we had as resistance, and we did take a short there as well, and now support. So that's a good zone to take some profit if we start impulsing down to this side. I wouldn't take profit much sooner. We do have a gap to fill there, but that gap will be filled, and we'll probably get some sort of wave 4 action here on a lower degree before moving down to here. But I would hold all the way through. I think this week we'll cover all of that this week to come. Amazon broke down from its wedge and just back testing, really trying to climb there because the market is positive. So it's trying to keep all keep what rising tides make all boats. I don't know what it's called. Make all boats rise. But sorry if that's dumb to you. But it's just holding up Amazon right now. And then there's some leading stocks here. In this one, once again, Meta got me. I am still short because I have plenty of time, and I think I know what's going on. So if we look at this Elliott wave, after this wave 4, we have a 3-wave move, A, B, C for wave 1. I'll kind of draw this out for you just so you can see what's happening. This would be from the bottom here, A, B, C for wave 1. You have a wave 2, and then another A, B, C for wave 3, and then wave 4. And you're getting that wave 5 in now. And that wave 5 should be ending somewhere around this resistance zone that we had here. We know we didn't tag it, so there's unfinished business, and that should have been the clue to let me know that this could go higher. On the holiday week, short weeks, the market loves to be, not all the time, but loves to be bullish, especially going into the weekend. And then we have job reports tomorrow while the market's closed. And you better believe, you better be ready for a gap down into Monday, because we're hitting these targets. We're finishing up formations. Look at Google. Google's super strong today. This is not bullish. We have an ABC for A. We have a 3-wave move for B, and now we have a 1, 2, 3, 4, 5-wave move for C. Now, can we get up to this 110 area? Sure, it's a point. It's 111 area. It's like 2 points away. Yeah, we could get into that on Monday. Maybe Google holds us up with Meta or even Microsoft, whatever. But kind of holds us up on Monday. I don't think so though. I think we're getting our weekly reversal signal, and then we get follow through tomorrow. Same thing with this. It looks just like Google. We have an A, B, C for a bigger way, a larger degree A 3-wave move down for B, and then a 1, 2, 3, 4, and then another one to end off at a wave 5. You have 1, 2, 3, 4, and we're ending off with that 5th wave up there, right at the top of the wedge resistance again. Okay, so are we going to go short Microsoft? We can go short right now to swing for the weekend, but we are pretty loaded. We're going to put a SPY on, and I think we're good because we're pretty loaded on our shorts. Clearly, we lost the trend on Tesla. Tesla may back test a little bit more, but I'm pretty sure that we have a 1, 2. And this is a wave 3, and that we're just working on wave 4 before continuation down for wave 5. NVDA. Oh, NVDA. NVIDIA broke down from its wedge. After that news, we rode this one down, got out of it, and we're back in NVIDIA again. And you see, just like Amazon, it's just riding the trend up because of the NASDAQ being so strong today into the weekend. Don't let it fool you guys. Don't get long here. Okay, that's that's it for the stocks. Now, the last but not least, this is the most important part, and this is why I've been stressing the VIX over and over, and I'm going to rant on one more time. It's the same situation. If you are new here, we talked about it back here. We're in this wedge. Again, we're in a wedge. We're in this setup. We're down at the bottom of this triangle that we've been tracking for a very long time. And each time it hits the bottom of this triangle, we get a nice break to the upside. We're setting that up again. We didn't break out of the wedge today, but we're setting back up off the bottom of the triangle. We're at a objective long on VIX, if UVXY, whatever. I don't use those tools a whole lot, but I use it more as a indicator, and we're getting ready to launch off of here again. All right, there's no doubt in my mind that that will happen. Now, what if I'm wrong? That means the market is going to continue. It's going to be bullish. It's going to go, to extraordinary higher ranges if we break down from this triangle, and not just a fake break like this where it was trying to get to the bottom of the wedge again. There's a wedge down here. It can happen that way, which means the market's going to go a little bit higher. But just be super careful. If you are going long in the market, you better bet that this VIX is going to go lower. And if you think we're making all-time highs, then this thing has to break down. No doubt about it. This VIX has to break down, and it has to make new ranges and make a whole new set of moves underneath this 18, 17, probably down to like the $12 range. That's what we'd be looking for going into a new bull market. We're not getting that. I'm telling you right now, we're not getting that. Okay, and I'll give you even a bonus here. And it looks like the dollar is kind of stabilizing at this point. It's also coming into a wedge. I think I might have it on this. Okay, we have a channel. It's actually breaking out of the channel and kind of back testing at that point. This thing, if it starts to go up, I have some ranges right here, and I think we're going to go up to the 110 area. That's not going to be good for the market. Okay, I'm not going to hold you up any longer. Make sure you like this video. Thank you for joining us at Options Center. We will talk to you sometime this weekend. Have a wonderful Good Friday.